Alright, let me just check my volume. Okay, great. So, let's start. This will be what I'm expecting for Thursday, right? Obviously, not financial advice. Right, this is just a disclaimer. Okay, and let's get started. So on the higher time frames, 4 hours, we can see that price has traded into 4 to 5 standard deviation on the monthly time frame. Right, so by theory, these levels here should have kept the monthly expansion. Okay, so I am expecting retracements or reversals right within these areas, and yesterday, Wednesday, it has traded up all the way to the fifth standard deviation, and after which we see a swing high form and a down close candle here. Okay, now heading down into this range here, right? I'm just going to use another chart for easier reference. Okay, let me just lock this out. Right, okay, so on 4 hours we have traded into this fair value gap here. Okay, this was the candle that took out this swing high. Okay, so we have this fair value gap, and then because of this down close candle and this swing high here, this is your 4 hours bearish order block. Okay, I'm highlighting the wick, right, because it has a long wick, so the low, the mid, and the opening price would be price levels that I'm interested in. Okay, and next up we head over to the lower time frames. So on Monday we have this small little retracements, and then on Tuesday price rallied. True open of the wick, it's on Tuesday's opening, so that would be right here. This is your true wick open. Okay, so right now we are above true wick open, and price has taken out buy stops, trading up all the way into the fifth standard deviation. So right now shorts are more likely to be my bias, and I'm leaning on it. Okay, I'm leaning to take shorts on Thursday heading into Friday. Okay, so right here we do have relative equal lows on the 1 hour. Okay, this low here, and on the 1 hour within this 4 hours bearish order blocks wick, or what do we have? We have implied fair value gap. Okay, so this wick here, 50%, will be the implied fair value gaps high. Let me just mark that out for you. Okay, I'm not gonna get the exact levels, I'm just gonna eyeball it. Oops. Okay, so this will be the implied fair value gaps high, CB. Okay, it's a CB high. Okay, so best case scenario, I do not want to see price trade above this fair value gaps high on a closing basis, and right here we have a breaker, these two down close candles here with confluence with the 4 hours on the blocks wick, and then we have this implied fair value gaps high. So this fair value gap here, can this fill? Okay, we will analyze that later on as we head lower. Okay, so let me just note this fair value gap. Okay, this will be the 1 hour fair value gap. Okay, now let's head over to the 30 minutes to see if there's anything. Alright, so this range right here, this will be your balanced price range. Okay, or should I say inversion fair value gap. So 30 minutes inversion fair value gap slow. Okay, now let's go even lower on the 15. Right, so as you can see, these are the levels here. So now I'm going to project the fibs. We are at 2 to 2.5 and price has not closed below that. Okay, another thing is that let's take a look at the 5 minutes, the first distribution. Okay, we're barely touching 2. Okay, so in my opinion, this fair value gap on the 1 hour should be left open. Okay, this fair value gap here should be left open, and we just trade up into this here, and then we drop lower to take out the equal lows if it is bearish. If it trades up into this area here, I don't think we are that bearish. Okay, I mean right down here I'll be staying on the sidelines to see if it wants to attack the high or the low, because right here it's right around equilibrium of this entire range. Okay, so let me just show it here. See, this is equilibrium. Alright, so even if it wants to comes up into this area, I will be waiting for a lower time frame shift in market structure before I can enter to attack the lows here. But personally, I don't really like it trading up into this area. Okay, this breaker and implied fair value gaps high should be enough to send the price lower, or if because it's right within the 4 hours order blocks a week, and then we do have a breaker as well, so there are lots of confluences lining up right here. Okay, now when you look at ES, you'll notice that ES has taken out this low right here. Okay, this was the low relative to this low on the Nasdaq. So this could be a potential SMT, which is why I need to wait for London. Okay, London should tell me what the price wants to do, and because Wednesday we have this highs, SMTs on the highs on a higher time frame as well. Okay, with Dow. So Dow did not and was not able to make a higher high as compared to ES and Nasdaq. So higher probability wise of would be shorts right now. Okay, ES on the other hand, we do have a fair value gap down here, and we have an inversion fair value gap up here. Okay, so which one is more bearish? That would be ES. Okay, so heading into Thursday, this will be my this will be the levels that I'll be looking at, and I'll wait for midnight's opening price, and then I'll look to see what London do. Okay, now this is going to look like accumulation, so that would be the best if we can get a consolidation in Asia. Once we get that, then I'll look for London to see whether it attacks the high first or the low first. Okay, and if I use the 4 hours. Okay, this is the current dealing range that we are in. Alright, and at the same time on the daily chart we have the previous day's low. It will be right here, previous day's low, and we have 50% of this week as well. So the low of yesterday would be right around 25% of the week, right? That will be my main draw on liquidity heading into Thursday. Okay, let's take a look at the 4 hours. No, 1 hour. Right, this is also another fair value gap on the 4 hours, this daily low here, and right down here below this equal lows we have this level here. So I am targeting this level for tomorrow until something changes. Okay, right now I'm leaning bearish, right? Let's see if there's anything I missed out. Right, as you can see on the 5 minutes, the bodies are closing right on these levels here. Right here, sort of missed it for this first leg of distribution. So the best case scenario is that both lines up together, but don't get that here. Therefore, it's kind of tricky. Right. If I use the 15 minutes, going to be like this, and if I use the breaker to take the sample, we are at 1 to 1.5. so it's pretty fickle here, whereby fickle here when there is lots of conflicting analysis here, because on the 15 minutes if it trades to the 1.1 to 1.5, it can offer a retracement back into OTE. Okay, and OTE, there will be this fair value gap right here on the hourly chart. Where is it? OTE. Right, OTE is right here of this current range. Okay, on the 1 hour we have a fair value gap down here, and the last up close candle here on the 1 hour. So let's see what it wants to do in London. Okay, I'll let time dictate my my bias. Right, and that's it for this update. Right, hope you enjoyed it, and good luck trading tomorrow.